Hello everyone, Larry Lavrentich for Ichimoku.co and ForexTrading.tv with a daily analysis for the US dollar Japanese yen for the trading day ending Monday, February 3rd, 2014. Well, a continuation of the downtrend today. A candle that's made a lower high and a lower low, very large black body candle. The final candle we're looking at here on the chart is a candle that's still currently developing, but some significant price action occurring there at the moment. But in the candle, it has finalized trading a very large black body candle, continuing this second time frame downtrend at the markets. In here we have the market making a series of lower peaks and lower troughs. Very efficient trading in terms of this downtrend that's been in place since the market was trading up above the 105 level and since early January. With the market trading down below the 102.19 level, we have now had the market confirming that second time frame downtrend. Once again, we had very efficient trading activity down from the 105 level, finding support around the 102.19 level with a breakout for the previous day's trading. It closed down below there, which was significant considering that the market had tested below the 102.19 level for 4 of the previous 5 trading days and been rejected from there, and that bearish close down below set the market up for the trading activity that we saw today. The bearish close down below 101.65 is quite significant, as well as is the bearish close down below the bottom of the cloud, and that gives us a bearish market in the long-term time frame with the market trading below the cloud. Whether we see any follow through, it's important, and I think we need to look for confirmation of that trend down below. What we've seen recently in a few markets is breakouts above or below the cloud, and we haven't seen the follow through, and I'd like to see the market continue the lower high and lower low. At the moment, this current candle as it's developing, we're seeing buying coming in with the market testing back up to higher levels and back to within the cloud, and what I'd like to see is the market take out the low of that previous candle that has finished trading, which is at 100.76, and potentially trade down to around this 100.48 level. If the market does continue rallying from here, there is a very good likelihood of finding resistance around the 101.65 area, and some sort of congestion or a rally from here wouldn't surprise, because this is a fairly extreme down trading day, this fairly large black body candle. It's difficult for markets to maintain price action at extremes, but some sort of congestion area or even a possible test down to this 100.48 level wouldn't really surprise. In terms of Ichimoku, as I've mentioned, a bearish market in the long-term time frame, changing that sentiment in the long-term time frame now, but also a bearish market in the medium and fast-term time frames by trading below the Kijun-sen and the Tenkan-sen, and both of those indicators are pointing down quite sharply, reflecting the solid downside momentum in this market, and it is suggesting that even if this market does rally, it's likely that the sellers will then come back into this market if they don't today. Looking at the Chikou span, that's below the corresponding price action, a long way below the corresponding price action. That suggests a very strong momentum in this market, and it does look a little bit extreme, so it wouldn't surprise to see this market attempt to rally up to the 101.65 based on this extreme momentum that we're seeing to the downside at the moment. But significantly, this market is bearish in all 3 time frames. If we do see the market rally, there is a very strong likelihood that the market will then continue to sell off. The level around 100.48 is fairly significant and has been tested previously as resistance and then sold off, and may hold as support, and if it fails to hold, then obviously the 100 round number is going to be very, very important for this market.